Welcome to The Explainer. Today, we are breaking down the absolutely wild story behind Critical Metals Corp's recent stock surge. I mean, this was a move so dramatic it got everybody talking, and we're going to dive into the technical signals to see what's really going on under the hood here.
All right, first things first. Let's just look at the raw numbers that caused all this commotion. Because, on one single day, the activity in this stock was nothing short of explosive.
So here's the headline number, a 45.2% jump. On October 6th, the stock just rocketed from under $8 to close at $11.59. I mean, think about that. That is a massive, massive move for any stock in just one day.
And get this, it happened on an absolutely insane trading volume. We're talking nearly 160 million shares changing hands. That just doesn't happen by accident. It signals a tidal wave of conviction from buyers, pushing that price up with some serious force.
A move like this doesn't just happen in a vacuum. There's a story here, and it's a story told by the technical indicators. So let's unpack what's driving this incredible momentum, and maybe more importantly, what it could mean for the stock's future.
So first, let's build the bull case, right? The evidence for continued strength here is pretty compelling, and it all starts with some of the most fundamental indicators of a trend.
Think of moving averages like a stock's typical cruising speed over different time frames. They kind of smooth out all the day-to-day noise and help us see if the current price is hitting the gas or maybe tapping the brakes relative to its recent history.
Now, what's really fascinating here is just how far above its cruising speed CRML is traveling. I mean, at almost $12, it is way, way above its 5, 20, and 50-day moving averages. This is a classic, straight-out-of-the-textbook sign of powerful, short-term bullish momentum.
But we can go even deeper than just the price. These next indicators tell us about the force and the conviction behind the trend. The question is, are we looking at a gentle breeze here or a full-blown hurricane?
And wow, this really tells the positive story. The MACD is strongly positive, confirming that upward momentum. The ADX reading is high, which tells us this isn't some weak, choppy trend. No, this is a powerful one. And then finally, the Arun indicator is maxed out at 100 on the upside, which basically screams that the uptrend is completely dominant right now.
But in trading, it's rarely that simple, is it? For every action, there's a potential reaction. So let's flip the coin and look at the other side of this story. Because while the bulls are clearly running, some key signals are flashing bright red. This is the key question every trader has to ask themselves. While the momentum is undeniable, some indicators are starting to suggest the stock might be like a rubber band that's been stretched way, way too far, too fast, and it could be due to snap back.
Okay, so the RSI is one of the most popular tools for this. You can think of it like a pressure gauge for the stock's price. A reading over 70 often suggests that the buying pressure has been so intense that the stock may be overbought and, due for a little breather.
CRML's RSI is currently clocking in at 81.6. Now, that isn't just over the 70 overbought line, it is deep in that territory. And while it doesn't guarantee a drop, it's a major warning sign that this current pace might just be unsustainable.
Next up, we've got Bollinger Bands. The easiest way to think of these is like an elastic channel that the price usually bounces around inside of. When the price breaks outside of this channel, it's a statistically significant event that signals an extreme move.
So here's the crucial point. CRML's price has stretched so far, so fast, that it has literally punched through the ceiling of its typical volatility range. This is another classic signal of overextension that definitely warrants some serious caution.
So what in the world does it mean when some signals are screaming go while others are screaming whoa, slow down? Well, it means we need to prepare for one key thing, a whole lot of volatility.
The data really suggests two main paths from here. In the bull scenario, this powerful momentum just keeps on chugging. Buyers push the price right past its recent high, and a whole new wave of buying kicks in. But in the correction scenario, those overbought signals win out. Sellers take their profits off the table, and the price pulls back to find a more stable footing at a lower support level.
For anyone watching CRML, these right here are the critical battlegrounds to keep an eye on. 1668, that's the ceiling the bulls need to shatter. The $9 to $10 range, that's the first floor of support. And below that, just under $7, you've got that 20-day moving average, a much stronger line of defense.
Okay, let's pull all this together. After looking at these fascinating and, let's be honest, Pretty conflicting data points. What is the final takeaway from CRML's wild ride?
And there you have it. The final verdict from the analysis is really one of balanced caution. The trend is undeniably positive. You just can't argue with that momentum. But the high volatility and these clear overbought signals mean that anyone involved needs to be prepared for some sharp moves in either direction.
And this really leaves us with a final thought about this inherent tension you always see in technical analysis, when an unstoppable force meets an immovable object. In this case, massive momentum versus these overbought conditions, it just highlights the crucial role that your strategy and your risk management play in navigating these markets.